All right, good afternoon, everyone. Thank you to those of you who have just joined us. We are a few minutes after the hour, so we will start with today's presentation. So as many of you know, on May 1st, the student loan payments will begin again. And so we are excited to present to you a two-part webinar series, A City Employee's Guide to Student Loan Forgiveness. So again, thank you all for joining us today for part one, and we hope you will come back again for part two, which will be on April 13th at noon. And we have a really great lineup of speakers today and a lot of information that we hope will be helpful to you. And so with that, let's just jump right in. So today's webinar is brought to you by WorkWell NYC. Our mission is to have the healthiest workforce in the nation, and we operate in 5 key program areas. We have Move More, which focuses on physical activity, Eat Well, which focuses on healthy eating and nutrition, Take Action, which prioritizes primary care and prevention. We have Be Well, which focuses on mental well-being and resilience. And lastly, we have Project Build, which stands for Building Understanding, Inclusion, Learning, and Diversity, and that is our health equity initiative. And my name is Anna Tan. I am the Be Well Program Coordinator for WorkWell NYC at the Office of Labor Relations. And I am excited to be joined by my colleagues. We have Deneen Osby, the Assistant Director of Strategic Initiatives at the Office of Financial Empowerment at the NYC Department of Consumer and Worker Protection. We also have Amy Zulata, the Outreach and Advocacy Coordinator at the Student Borrower Protection Center. And last but not least, Katie Crumter, Senior Financial Counselor at NYLAG, the NYC Financial Empowerment Center. And so for today's webinar, we'll be talking about a few different things. First, we'll be talking about financial well-being. We'll provide an introduction to the Public Service Loan Forgiveness Program. We'll talk a little bit about loan repayment options and tips for financial management. We'll share some resources and have some time for Q&A at the end. And just as a friendly reminder, this presentation is being recorded, so the presentation and the slides will be shared with you all afterwards. So first, let's talk a little bit about financial well-being and what it is. According to the U.S. Consumer Financial Protection Bureau, financial wellness can be generally described as having these 4 main elements. First is feeling in control over day-to-day expenses. So what that means is you feel comfortable with making ends meet. You're able to not worry about affording to pay for groceries, rent, utilities, bills, or things like that, and you feel financially secure in the present. The second component is having financial resilience. Financial resilience can be defined as the ability to withstand a shock or bounce back from a stressful financial event that can impact your finances or your income. So for example, if something were to happen, such as losing your job or going through a divorce or even having an unexpected health issue, and suddenly you have all these expenses, how well would you be able to financially adapt to these situations? And how long or how quickly would it take you to recover from this? So if those kinds of scenarios are something that you can comfortably accommodate for financially, then you could be described as having financial resilience. The third element is being on track to reach savings goals. So in addition to being able to manage day-to-day expenses, many of us may have longer-term goals, such as saving for a major purchase, such as buying a home or a vehicle, or saving for retirement. If you're able to set these long-term savings goals and have a plan and stay on track to reaching those, this is another key element of financial wellness. And the last element is having flexibility to make choices. Some examples of this include having the option to splurge on a dinner at a fancy restaurant, or taking your family out on a nice vacation, or having the freedom to choose to work less hours in order to spend more time with family or spend more time on hobbies. So for the average person who might not be a wealthy millionaire or billionaire, as long as you have these 4 elements, you can be generally described as having financial wellness. And I would like to hear from you all, what are one of the elements of financial wellness listed here that you would like to improve on? And please share in the chat. So some of you may be wondering, what is the connection between financial wellness and health or mental health? So at WorkWell NYC, we define health as being holistic. It's more than just getting enough exercise or eating enough fruits and vegetables. We define health as having fulfillment in all or multiple of these 8 dimensions of wellness that are listed here. And as we can see, financial wellness and mental health are all interconnected. Someone who is experiencing daily financial challenges may find that their mental health is declining. And on the other hand, those who identify as having mental health challenges might feel that they are struggling with finances, whether it's having more debt or feeling like they're not on track to reach their financial goals. And so for individuals who might feel that they are having stress or anxiety about money or finances, this can manifest in ways such as having poor quality of sleep. It can also be having stress or anxiety over day-to-day activities, having feelings of isolation, or even increased risk of substance misuse, such as increasing alcohol consumption or smoking tobacco. And so we hope with today's presentation, you will learn some tools and some information that can help you better manage your financial wellness, which in turn will improve your overall health and quality of life. So now let's talk a little bit about student loan debt. So the average student loan balance, which includes federal and private loans nationally, is about $37,000. In New York State, it's a little bit lower, $36,000, but in New York City, we can see that it's much higher. It's about $41,000. And it's really important to note that in New York City, the cost of living is much higher than it is compared to other areas. So whether it's paying for housing, transportation, food, entertainment, et cetera, all of these things can really add up. And that also adds to the financial burden that many New Yorkers may have if they also have student loan debt. And when we take a closer look at New York City, about 1 in 5 New Yorkers reported having debt of some kind for higher education. And the data shows us that student loan holders were more likely to be Black, younger than 45, experiencing material hardship, and are more highly educated. And this is important to acknowledge because it goes to show that for people with student loan debt, the burden of student loan debt disproportionately affects different communities. And so at the end of this presentation, we'll talk a little bit about different resources that are available to you all that will hopefully be helpful in managing your finances. So I would like to hear from you all, and we'll do a quick poll. Could you please rate your level of anxiety about managing finances? And this is on a scale of 1 to 5, with 1 being not anxious at all, and 5 feeling very anxious. So please take a moment to complete the poll. It's totally anonymous, so please don't hesitate to share your feelings. All right, thank you for doing the poll. So we can see it's kind of a mixed group. The majority of people are sort of either neutral or skewing more towards anxious or very anxious. And we hear you talking about money and student loans, et cetera, can be very stressful. And we hope that this will help ease some of the anxiety that you all might have. And we have another poll here. How long do you think it'll take you to pay off your student loans? And I will launch the poll now. And here we have our options is in 2 more years, in the next 5 years, in the next 10 years, in the next 20 years, or more than 20 years. And again, this poll is anonymous, so please feel free to share your response. All right, thank you for doing the poll. Again, we can see it's a mixed group. Most people said in 10 years, but there are some people who anticipate it'll take 20 years or more or less. So thank you again. And now I will turn it over to my colleague, Deneen Osby, to talk about the Public Service Loan Forgiveness Program.
Thank you, Anna. First, I would like to thank Workwell NYC for collaborating with us to put together this presentation. Workwell has great events and valuable resources for us as city employees. So good afternoon again, everyone. My name is Deneen Osby. I am the Assistant Director of Strategic Initiatives at the Office of Financial Empowerment within the Department of Consumer and Worker Protection. So I also want to give a big thank you to our next two speakers, first from the Student Borrower Protection Center and the New York City Financial Empowerment Center. Amy from the Student Borrower Protection Center will provide us with information about public service loan forgiveness. And Katie from the New York City Financial Empowerment Center will provide information on how we can sign up for free, individualized, confidential financial counseling and coaching that can support us with our student loan goals. And lastly, thank you to all the attendees for being here today to learn about financial wellness. So, what's new with student loans? First, the U.S. Department of Education has extended the pause on student loan payments until May 1st, 2022. Now, keep that date in mind. That date has been extended a few times, and it is possible that it may be extended again. However, we want you to be aware of that date as you plan to incorporate student loan payments back into your budget. Now, the pause means three things. First, loan payments have been suspended. Second, interest will not continue to accrue. And third, collections have stopped on defaulted loans. So again, let's keep that date in mind. May 1st, 2022 is when student loan payments may resume. Now, as a city employee, there are some opportunities that may benefit you. First, there is a Public Service Loan Forgiveness Program, or the PSLF. Our next speaker, Amy, will give you more details about that, so stay tuned. And there is also the Limited Public Service Loan Forgiveness Waiver opportunity. Under the PSLF waiver, borrowers that have previously disqualifying loan types and repayment plans may accumulate credit towards 120 qualifying payments that are required under the PSLF program to have their loan balances forgiven. But this temporary opportunity is only through October 31st, 2022. So we would like you to keep those two dates in mind. May 1st, 2022 is when loan payments may resume, and October 31st, or Halloween of this year, is when a temporary PSLF waiver will expire. Now, I know you want to learn more. So our next speaker, Amy, will provide us with additional details on a PSLF program. Amy?
Hi, thank you so much for having me today. I'm really excited to be here. I'm Amy Salata, the Outreach and Advocacy Coordinator for the Student Borrower Protection Center. And just a little bit of background on the SBPC. We're a nonprofit policy organization focused solely on alleviating the burden of student debt in the country. And we advocate for student loan borrowers through a mix of policy, advocacy, and litigation strategy at both the federal and state levels. So today, as Deneen mentioned, I'll give an overview of the Public Service Loan Forgiveness Program under the waiver, and then some loan repayment options for borrowers. And just a reminder that if you have questions, if you could use the Q&A feature rather than the chat so that we can answer as many questions as possible and serve you best, that would be great. So just to start, Congress created the Public Service Loan Forgiveness Program in 2007 to help public service workers who were struggling with student loan debt, and to make sure that future students and graduates wouldn't be deterred from entering public service for their student loan balances. There are normally 4 specific criteria for the PSLF program. So first, you need to have a direct loan. That's one of several federal loan types. Second, you need to be in the correct repayment plan, which is generally an income-driven repayment plan or an IDR plan. Third, you need to work in a public service field. And everyone on this call qualifies because you're city employees, but we'll talk about that in a little bit. And then finally, you also need to make 120 qualifying payments, which is 10 years worth of payments. So essentially what the department's waiver does is give public service workers credit toward loan forgiveness, regardless of what type of federal student loan they have, for any period of time since October 1st of 2007, when the program began, and as long as they were in qualifying public service employment and their loan wasn't in default, deferment, or forbearance. So even for months in which borrowers didn't actively make a payment, as long as the loan was in repayment status, and not in default, deferment, or forbearance, they can receive credit. These credits will be retroactive, so borrowers can receive credit for past payments that were previously ineligible. So in short, for any month since October 1st, 2007, that a borrower had any type of federal loan, worked for a qualifying public service employer, and wasn't in default, deferment, or forbearance, that borrower can receive credit towards the 120 months required for loan forgiveness under PSLF. However, this waiver isn't completely automatic. Normally, public service loan forgiveness requires that borrowers have a specific loan type, direct loans, as I mentioned. Although the waiver allows borrowers with any loan type to get credit, those without direct loans must take some steps to convert their loans into direct loans through a process called consolidation, although they will still get time and credit for time before the conversion of that loan. And almost all borrowers, regardless of loan types, will have to certify their employment with the Department of Education for any periods of qualifying public service work since that date of October 1st, 2007. And the idea behind that is that if the government doesn't know if you had qualifying work, it can't award you the right credits. Next slide. Okay, thanks. There are 3 things that all borrowers should do if they want to take advantage of this public service loan forgiveness waiver. First, you should confirm your past and present employers are qualifying public service employers. Determine your loan types and consolidate them if necessary. And then finally, certify your employment with the Department of Education. And remember that this is a time-limited waiver, so all of the paperwork on the borrower's end must be completed by October 31st of 2022. So first, confirm that you have a qualifying employer. Nothing about this requirement changed during the waiver period. You still need to work in public service, except that for during the waiver period, you don't still need to be employed at the time that you apply for forgiveness after your 120 payments. And remember that qualifying employers include any government employers, that's federal, state, local, or tribal, or any nonprofits that have a 501c3 tax exempt status. Certain other nonprofits also qualify. However, unions and political organizations do not, nor do any for-profit employers. Again, all of you on the call are city employees and qualify as such, but if you had previous employment with nonprofits or other government agencies, this is why this step might be useful to you. And if you aren't sure if your past employer qualifies as a public service employer for PSLF, the Department of Education maintains a list of qualifying public service employers that you can search. It's important to note, though, that this list isn't necessarily exhaustive. It could mean that if your employer doesn't pop up when you do the search, it could mean that no one else from your organization that you worked for in the past has sought PSLF. And so don't be discouraged if you work for, or if you had worked for a 501c3 nonprofit and you know that that is qualifying employment, you can still go forth with the other steps that I'm going to mention. But I just want to mention this as a helpful tool for people who have past employment that might qualify. And the so you can use this, you can find this using the PSLF help tool, which is available at studentaid.gov. And the employer database is the first step in the PSLF help tool, so you can quickly access it to look up your past employer status. Step 2, you should figure out what type of federal loans you have. The 3 major loan types that most folks today have are direct loans, federal family education loans, or FFEL loans, FFEL, and Perkins loans. For public service workers to get loan forgiveness for their FFEL and Perkins loans under the PSLF waiver, they'll have to consolidate, which is like a refinancing process, and they'll have to consolidate those loans into a direct loan. Remember, what's special about the waiver is that normally when you consolidate your loans, you lose any past credit towards forgiveness. But during the waiver period, you can keep that past credit and apply it to the new consolidated loan. Another tip specific to the waiver period is that if you have older FFEL loans and newer direct loans, you could consolidate all of them into one new direct loan, and they would all be on the same timeline for forgiveness as your oldest FFEL loan. So you might not think to consolidate a newer direct loan because it already qualifies for PSLF, but if you did that, it would be on the same timeline as your oldest FFEL loan or your older loans. I also want to mention that we often get a lot of questions about Parent Plus loans. So I want to mention that in general, Parent Plus loans can qualify for PSLF. They just need to be consolidated in order to access the income-driven repayment plans. And under the waiver, Parent Plus loans must be consolidated with loans taken out for one's own education. Next slide, please. So the final step that all public service workers with federal student loans should take is to certify their qualifying employment with the Department of Education. The form to do this is called a PSLF form, but it was previously called an employment certification form. Borrowers should certify their employment using the PSLF help tool, which I mentioned, that is at studentaid.gov. And that tool will generate a form for you, which your employer will have to sign. And if you have multiple employers, I imagine some people on this call have had multiple employers since 2007, right? You'll need to get a form for each of those employers that you think qualifies for public service loan forgiveness and have each of those employers sign the PSLF form and hand it in. So I think next we're going to go to a quick poll question. Okay, so we want to know if you have already certified your employment, and the options are yes, you have, no, you haven't, and you're not completely sure. Okay, thanks for participating. So it looks like most people haven't certified their employment yet, but a few have and some aren't sure. Okay, that's really helpful. Thank you. All right. So just some helpful resources for the PSLF. You can visit the PSLF help tool at studentaid.gov. That website will really be your clearinghouse for the most up-to-date information on the waiver and the PSLF program generally. It'll really be your best friend during this process. So I encourage you to go to studentaid.gov and learn more about the PSLF program. Next slide, please. Thank you. If you experience any issues during this process, you can file a complaint with the Department of Education, Federal Student Aid's Ombudsperson. You can also file a complaint with the Ombudsperson for the state of New York, which is located in the New York State Department of Financial Services. We also have a list of ombudsperson listed out by state on our PSLF resources page, which can be found at protectborrowers.org/PSLF. And there are also shorter videos of pieces of this presentation that go through step-by-step how to apply for forgiveness under the waiver, if that's helpful. Next slide, please. So remember, so the big takeaways from this are you should confirm if your employer is a public service employer. Again, as city employees, you qualify, but you might have former employment that could qualify. So you should check to see if your past employment qualifies, and then you could get more credit towards forgiveness. You also should check what type of loans you have. Remember that direct loans qualify for PSLF, and if you have Psl or Perkins loans, you'll need to consolidate those in order to access PSLF. Remember to consolidate your loans if you need to. So as I mentioned, if you have Psl or Perkins loans, you'll need to consolidate them into direct loans. Submit your PSLF form, or formally called an employment certification form, for any employment that you had in public service since October 1st, 2007. And credit will be given for any months during which any loan type was in repayment status, even if you didn't give, even if you didn't make a payment, and as long as it wasn't in deferment, default, or forbearance. And then finally, if you have any issues during this process, please complain to the ombudsperson with Federal Student Aid or with New York State. So now I'll briefly discuss some loan repayment options for borrowers as a reminder, especially, it's important before payments turn back on in May. So federal loans, regardless of who owns them, have a number of repayment options. Generally, they default to the 10-year standard plan, which is the same monthly payment for 10 years until paid down. There's also the extended plan, which is a lower fixed payment for a longer period to repay the loan, or the graduated plan, which is still for 10 years, but starts with a payment that's lower than the standard plan, and it ends with payments that are higher than the standard plan. I'm going to spend a little bit of time talking about income-driven repayment plans, since that's what's necessary to have in order to access PSLF. So there are several IDR plans, but their common feature is that they set your monthly payment based on your current income. And they're designed for the payments to be affordable. So if you have low or no income, your payment could be $0, but still count as a payment. Another feature of income-driven repayment plans is that after a certain number of years of making these payments, either 20 or 25, the remainder of your debt will be forgiven. And of course, this is expedited to 10 years if you're doing the Public Service Loan Forgiveness Program. Now, importantly, generally, that forgiven loan amount is considered taxable income at the end of the line, not the case for public service loan forgiveness. And also earlier this year, the Biden administration passed a law that makes debt forgiveness tax-free until the end of 2025. We'll have to see if they make that permanent, but it's an important thing to keep in mind when planning. And as I mentioned, the payments are intended to be affordable. So there are specific calculations for each plan to set monthly payments, which are generally 10 to 15% of your discretionary income. And that's calculated as the difference between your gross income and 150% of the federal poverty line. This is how borrowers can end up with $0 payments if they have low or no income. So these plans here qualify as income-driven repayment plans. So you'll see ICR, IBR, pay, and repay. The goal is choosing a plan that is right for you, and it estimates the payments that you'll have to make under each of these plans, which can be the guidepost for which plan would work best for you. And each plan calculates monthly payments a little differently. So for married borrowers who file their taxes jointly, the entire household income will be taken into consideration. For married borrowers who do not file jointly with their spouse, the plans vary as to whether they take the spouse's incomes into effect. For example, repay requires both, no matter what, while pay and IBR require only the borrowers if they file separately. So they're a little different, and you want to pick the plan that's right for you. The Department of Education has a repayment estimator that you can use to see what your payment would be under different plans, which is really helpful for people in planning. Next slide, please. So payments are currently scheduled to resume after May 1st of this year. That might change, but we're not sure yet. One thing that you can do to prepare is to update your contact information. Many people have had to move over the past 2 years, and you don't want to miss any notices about repayments resuming. You should get your next monthly statement 21 days before the next payment is due. And if you made a payment, if you made a voluntary payment since last year, you can request a refund. Also, remember that your payments should resume to be the amount that you were paying when the payment pause started. So if you're already enrolled in an income-driven repayment plan, the recertification deadlines have been extended, and you should receive a notice before your next deadline comes up. Servicers have also agreed to take verbal income-driven repayment certifications over the phone to make things easier for borrowers, but that's temporary and it's unclear if it will continue to be the practice. If you haven't already enrolled and you're worried about affording payments when they resume, you can look into income-driven repayment options, which we discussed. And finally, if you had automatic payments set up before the pause and you haven't turned them off, they'll resume when payments start back up. So if making full payments is going to be a problem for you, you should turn off automatic payments as soon as possible, and definitely at least 3 business days before the next payment is scheduled. So I think that's all I have for you. Thank you very much for your attention. And now I'll turn it over to Katie Crumter for a section on financial counseling.
Sorry, everybody. Excuse me. So let's go to the next slide, please. So we've been talking a lot about financial wellness, about student loans in general, and what happens after the pause ends, as well as the PSLF program and the limited waiver. frequently it's beneficial to get some help with our finances. And that is where the Financial Empowerment Center, my colleagues, and I come into play. So the Financial Empowerment Centers provide free professional, confidential, one-on-one financial counseling in person or over the phone to anyone who's 18 or older who lives or works in New York City. And there are no income or immigration status restrictions. Next slide, please. And so what does this help look like? Specifically, as it relates to funding education and student loans, we can help you create a budget to pay for school. We can explore student loan options and loan forgiveness, not just public service loan forgiveness, which Amy was talking a little bit about, but also there are state programs that we can discuss. We can help you to enroll in an income-driven repayment plan if you have federal loans. We can deal with unpaid loans from previous enrollments. We understand loan discharge options, not just the closed, we know about closed school discharge, borrower defense against repayment. There are a lot of different discharge options. There's also just if you're on an income-driven repayment plan and you've been making payments for 20 or 25 years, depending on what the loans are for and which payment plan you're on, you could possibly get a loan discharge that way as well. We also can work with you with loans that are in collections. Next slide. So we also can, this is just some sort of general stuff that we do, not specifically related to student loans. We can work with creditors on your behalf about existing loans or existing debts that are in collections or that have been written off from the original creditor. We can either negotiate on your behalf with creditors or teach you how to do that. We can help you set up a spending plan. This is just another way of saying a budget. We can help you separate business and personal finances to help you manage your money. I think a lot of people, they have a budget and they're like, well, how am I supposed to stick to this? And sometimes that means, using an app, something like Mint or Good Budget or YNAB or Truebill, or sometimes, creating a spreadsheet, and we can work with you on that. We can help you open bank accounts. If you have a problem opening a bank account, we can figure out why, and we can give you some recommendations as to what you can do. We can work on a debt pay down plan, and we can help you improve your credit. Next slide, please. So we do have people who have, I actually, prior to the limited waiver, so prior to October of last year, we had, I hadn't known anybody who had received public service loan forgiveness, but had talked to a lot of people who had applied for it. And now I know many people that have actually received forgiveness. So I have a client that I started working with in September, and they had student loans. They've been working for the city for 15 years. The school encouraged them to take out the student loans. They have created a burden for their entire financial life with their spouse. They postponed a lot of financial goals. They postponed having children. They couldn't afford to purchase a home. The spouse, while my client works for the city and they have the pension, their spouse hasn't really been able to contribute to retirement for most of their career. Since I started working with them, when we first spoke in September, we were talking about public service loan forgiveness. We talked about how many payments they thought they had. They still thought they had like about something in the neighborhood of 15 or 20 payments left. After I spoke to them the next time in October, they had received a letter from the Department of Ed stating that they were going to be receiving public service loan forgiveness and possibly a refund. And then after that, in December, I spoke to them again, and they received a refund, something in the neighborhood of $15,000 refund, as well as public service loan forgiveness. And they are continuing counseling with me and telling everybody they know to go and get to go and speak to a financial counselor at the Financial Empowerment Center. Next slide, please. So what are some of your money management tips? Drop them in the chat if you have any suggestions or recommendations for anyone. For me personally, I use cash for all my, like what I would call extras or like my spending money. I give myself a budget that I withdraw from an ATM every week. And if I run out, then I am completely out and I have discretionary money until the next time. So that's just what I do to make sure I stay to a certain dollar amount each month. So why don't you tell us what some of your options are and what you guys do? Love to hear it. I know that there are a lot of questions. I'm going to pass this back to, I don't know who's going after me. I'm sorry. I think Anna's probably going to do a wrap up. And then we'll try to address some of the questions. I have started answering a bunch of questions in the Q&A prior to my little speak here. I'll get back to that. I don't know. I'm going to pass this back to Anna for now, though. Thank you.
All right, yes, thank you, Katie. It is me who is up next, and thank you for that wonderful introduction to the Financial Empowerment Centers and that very inspiring testimonial about the client who was able to get a lot of help and resources from the Financial Empowerment Center, including the refund on payments, as well as forgiveness on loans. So again, I see there's a lot of questions coming in the Q&A. Please continue to submit your questions. We'll do our best to respond to as many as possible. But of course, given the limited time frame, it's impossible to get to all of those. So I will be talking about some resources that are available to you all that I hope you'll be able to utilize in case your question was not answered today. So again, of course, to recap, the Financial Empowerment Centers, they provide free one-on-one professional financial counseling and coaching to help you in reaching your goals. So if you would like, you can make an appointment online, or you can call 311 and say financial counseling. Again, the Student Borrower Protection Center is another great resource. They're a nonprofit organization that focuses on reducing the burden of student loan debt for millions of Americans. So if you're interested in learning more about them, please visit their website that is shown here. Next is the Deferred Compensation Plan. So for the New York City Deferred Compensation Plan, that provides city employees a way to save for retirement through convenient payroll deductions. And for individuals who are members of the Deferred Compensation Plan or the NYC IRA, you're eligible for individual consultations with a certified financial planner. And the Deferred Compensation Plan staff also offers free financial wellness webinars. So if you're interested in that, you can visit their website, and you can also give them a call to set up an appointment for the consultation. And of course, as we mentioned earlier, managing money and finances can be stressful and put a strain on mental health. And if that is the case, I would like to recommend the Employee Assistance Program, or EAP, as another great resource. So the EAP provides education, information, counseling, and individualized referrals to assist with a wide range of personal and social difficulties. And the EAP is available for all city employees and their dependents. So please give them a call or send them an email, and they will be happy to assist you. And next is NYC Well. So NYC Well is a really great resource in that it offers free and confidential mental health support. You can speak with a counselor over the phone, through text or chat, and you can access mental health and substance use services in more than 200 languages 24/7. So you can give them a call, or you can text WELL to 65173, and you'll be able to speak with someone to get mental health support. And so we covered a lot of information today, but just to summarize, the Public Service Loan Forgiveness Program forgives the remaining balance on an employee's direct loan after 120 qualifying monthly payments have been made under a qualifying repayment plan while working full-time for a qualifying employer. And as Amy mentioned earlier, since all of you on the call are city employees, your employer is qualified. Next is the limited PSLF waiver is available through October 31st or Halloween, as Deneen likes to say, and that expands eligibility to additional loans and payment plans. And lastly, again, student loan payments will be resuming on May 1st. And if you need any additional help managing your finances or are experiencing any stress or anxiety due to managing your finances, money, income, etc., there are a number of resources that are available to you. And so now we have some time for Q&A.
Anna, should we just start? Do you want us to address some of the questions?
Yeah,
do you want us to just take some of the questions in the
go ahead and yeah,
Q&A?
I see if there's some of the ones in the Q&A, please feel free to just jump in and respond to those. Yeah, thanks, Katie.
Okay, I've seen this a couple of different times. Somebody's asking like if getting married is gonna change the amount you need to pay on the income-driven repayment plan, and the answer to that is possibly. It could go down, it could go up. It's going to change your family size for certain. Amy mentioned the payment plans. They could, some payment plans include your spouse's income if you file married filing jointly. Some payment plans do not include them if you not married filing jointly. They will all include your spouse's income if you file married filing jointly. If you file married filing separately, some may not include your spouse's income. So the answer to the question is, could the amount increase? Yes, but it could also decrease if your spouse doesn't work or have any income, or has like lesser income. So that's a lot. So a lot of people, somebody asked if they should file jointly or separately. They just were married last year. That's not a question we can answer. It's not the same answer for everybody. You'd have to actually do the math and see what your total tax burden is if you file separately versus jointly, and what your payments would be if you file separately versus jointly. You'd have to do, there's a lot of math involved, but basically there's not like a one answer fits all. I will tell you that well, I'm not going to tell you, there's not a one answer fits all. Amy, you want to address any of these things here?
Yeah, sure. So I'm also seeing a lot of questions about how often you should certify your employment. We recommend doing it every year that you work for a public service employer, and then also doing it every time you switch jobs. You don't have to do this. You could do it at the end of 10 years, but often issues arise and it's much easier to catch them when they're happening, in real time, rather than dealing with it 10 years later. So you have a better chance of catching any mistakes that are made if you do it every year and every time you switch public service employers. Another question I wanted to address is that someone asked if the application costs any money, and it does not. So if you go to studentaid.gov and use the PSLF help tool, again, this is going to be the main site that you're going to use to access this application. It does not cost any money, and that's where you'll find the most up-to-date information.
All right, thanks, Katie and Amy. I see it looks like there's a question here about working for the city for about 6 years, but only applied for PSLF this year. And can this person get credit for the previous 5 years when they did not apply? So in other words, can they certify for payments for PSLF for previous years where they hadn't already been in PSLF, if that makes sense?
Yeah, Amy, why don't you address this one, Amy?
Sure, yeah. So yeah, this waiver is exactly meant to catch people like you who had past employment that was previously ineligible because you were either in the wrong, you either had the wrong loan type or you are in the wrong payment plan. And so yes, you can apply under the waiver using the steps we mentioned to consolidate your loans if necessary, and then also submitting your PSLF form for your employment from the date that you started, so that you can get those extra 5 years, or for other people, however many years that you worked in public service that you didn't already apply for public service loan forgiveness.
I'm seeing a bunch of questions about either zero payments and if they count towards public service. So I don't mean to be taking your questions, Amy, but it's all about public service. About $0 payments and if they count towards public service loan forgiveness, as well as if the COVID months count towards public service loan forgiveness. The answer to both of those questions is yes. The Congress was very specifically allowed the pause months to count towards public service loan forgiveness, as well as, any type of discharge that you have to build time. So as long as you had qualifying employment, that's the key here. You have to have qualifying employment. If you had qualifying employment, then all the months during the pause would have counted and all of your $0 payments would have counted.
I also see there are a lot of questions about the PSLF waiver. I just want to remind you all that when we have part 2 of this webinar series, we will be doing a step-by-step walkthrough of how to complete the waiver. So that will be on April 13th at noon. So if you have any more questions about the PSLF waiver, we will talk more about that in detail at that point. And I see we also have a question about the waiver. Can you use the waiver if you worked part-time for a qualifying employer, or is it only for full-time employment?
This is a great question. So essentially you have to work full-time, which is counted as 30 hours a week, or whatever your employer deems as full-time if it's higher. You can have multiple part-time jobs with different public service agencies. So say you worked for a government for 15 hours a week, and then you worked an additional 15 hours at a nonprofit. Those add up to 30 hours, and so they would qualify, but you'll just need to submit PSLF forms for every organization you're applying for. So yes, they can count if you have multiple part-time jobs in public service.
Amy, do you want to address the Parent Plus loans and PSLF? Just briefly, I'm sorry.
No.
And
yeah, I'll mention it again, but feel free to jump in if you think it deserves further clarification. So essentially, Parent Plus loans can qualify, but they need to be consolidated in order to access the income-driven repayment plans. Under this waiver period, they also can qualify, but you'll need to consolidate them with loans that you took out yourself for your education that you completed. So that's the answer on that. But Katie, if you want to add anything to highlight more, okay.
No, I think
key.
it's key to remember that if you consolidate them, in order to get them to count, they need to be with a loan that you took out for yourself. They got to be put in with a regular loan that you took out for your education. I think that that's the key thing. So it's not every parent that's actually who works for a public service that is going to be able to get these to qualify in a way that they would be eligible for public service loan forgiveness.
We have another interesting question here. We have a participant who has direct loans from their master's program. And if they started to make payments on these programs now, but decided to go back to school and took out more loans, how would those loans fit into loan forgiveness for PSLF? And would they have to consolidate new loans with old loans?
If you can consolidate under the waiver period, then all of those loans will be on the same timeline as your oldest loan. But I'm actually not certain how it would work after that point. And I don't know if you want to speak to that, Katie, or if you have other ideas.
No, I don't think so. I mean, I think it's definitely, if you have already payments in, I would consolidate them to your oldest, consolidate the newer stuff with the older stuff, just so that it the count date goes back to the initial payment of the older stuff. But other than that, I don't think I have anything. There's a lot of questions about what happens if my income changes, and what does that do to my payment? It will eventually, if your income goes down, I suggest you reach out to your servicer and get a new payment, have them recalculate your payment. If your income drops, if your income rises, just when you have to recertify, when you're on an income-driven repayment plan, you have to certify your income annually. And so you don't have to certify in between. I would just encourage people, if their income drops and their payment is now too expensive, they can call and get them to reduce the payment without going on forbearance or deferral or anything like that. You can have them recalculate it. I also want to mention, May is happening. And if your income is lower, May is probably happening. Again, I just saw something by somebody who said he's thinking about extending the pause. That's like the newest news, like 2 days ago that came out, I think on the Sunday shows, is that it's still up in the air. Amy, I'm sure you heard that. Like, it's still possible, maybe?
Yeah, actually some good news reported by Politico last night is that President Biden has directed all servicers to not issue repayment notices yet. And so that could mean that they're considering another extension. It's unclear. So we're still waiting, but better to prepare for that May date, just in case it happens, right? So that you're ready.
Yeah. So I just want to mention that when the payments start up again, if your income is lower than it was the last time you certified, sometime a million years ago in 2019, then you want to certify your income as soon as possible, because your payment's going to start up. The default payment will be whatever the payment was previously if you were on IDR. And if your income is lower, maybe that payment is too expensive for you. If your income is higher or the same, then just wait for them to eventually ask you. They will eventually ask you, but the Department of Ed has given them a lot of leeway in as far as when they can ask for that money back. I ask for the recertification. There's a couple of questions here about somebody's asking if they need to apply for the waiver or if it is automatic. If you've applied for public service loan forgiveness, the rules surrounding the limited waiver are automatic. You don't have to do anything for that. What's not automatic is the application for public service loan forgiveness that you have to do prior to October 31st. I also want to answer, there's a couple questions like, what happens if I am in public service and then I leave for a couple of years and then I come back? So I have 10 years, but it's over a 15-year period. That's fine. You don't have to do the 10 years in a row. If you have 10 years of qualifying employment and you've been making payments or on a payment plan, at least not in forbearance for that whole period, you may be eligible today for public service loan forgiveness.
And I see we have a question here from someone. They said that they were told several years ago that they don't qualify for PSLF because they were using a regular repayment plan. And then they were told that it wouldn't make sense to change plans at that point, because by the time 120 payments were completed under the new plan, they would have paid off the balance. So with this waiver, does it mean that they can qualify even if the 120 payments were not made under an income-driven repayment plan?
Yeah, so this is why the waiver exists, and it's meant for people exactly in this situation. So most people were knocked out of the program because they either had the wrong loan type or they were in the wrong repayment plan. And so if you have years of work and you were submitting payments under the wrong repayment plan, then absolutely you should get your paperwork in before October 31st for the PSLF waiver, because you could have all that past credit count towards your forgiveness. So absolutely. I'm also seeing,
yeah, go ahead, Amy.
Okay. I'm also seeing some questions about what to do if your employer either no longer exists or if they're refusing to sign the form for PSLF. So if you have your PSLF form for your employer and they're refusing to sign it, or they no longer exist, say they went out of business and they were a nonprofit, there is a box on that form that you can check that states that either it went out of business or that the employer is refusing to sign the form. Because obviously, if you're going back till 2007 for all your employment, it might be hard to track people down, or maybe they did close. And so there is an option to check that box if there is an issue getting your form signed.
I see we have another question from someone. They've already paid off their Perkins loan. Can they receive a refund for that payment?
If you don't have loans, you can't get forgiveness now. I do know that they are doing some refunds of money if they've had overpayments, but they still have loans in existence. So that's the difference there. There's a question here. Did you want to add anything to that, Amy, about the Perkins payoff?
No, that's great. Thank you.
Somebody's asking about how consolidation impacts credit ratings. I'm going to address this because I think they're talking about refinancing, and I do want to address refinancing. So consolidation shouldn't have any impact on your credit rating. Honestly, it's something that's just happening in the background at the Department of Ed. And, instead of seeing 5 loans on your credit report, now you're going to see 1. All the 5 will say like transfer to another lender or something like that. However, if you're talking about refinancing, that will impact your credit in the same way that taking out a loan will impact your credit. Any loan, like a regular loan, not a student loan. Refinancing, what refinancing does is it converts your federal loans to private loans permanently, and there's no way to get them back to federal. And so, that could make sense for people. I'm not, there is a possibility where private loans do make sense for you if you have consistent, solid employment, if there is no way you're going to receive public service loan forgiveness, if you have very good credit and you can get a much lower interest rate, especially if you have something like, if you have grad school loans and you have really good credit, you may possibly be able to get a lower interest rate on those, a significantly lower interest rate. But I just want to caution people before refinancing. If somebody is asking you to refinance, just keep in mind that is not consolidation. That is not going to put you on this thing for the PSLF. This isn't going to, make all your past payments count. That's actually converting it from federal to private. And I'm sorry, I've spent a long time talking about this, but federal loans can be, there's a lot more flexibility that you can do with your federal loans, especially if you're not working. So I just want.
All right, well, thank you, Katie and Amy, for taking all these questions. So we are running out of time. So again, I just want to reiterate that today's presentation is being recorded and all of this information will be shared with you all. And again, we recognize that there are so many questions that we didn't have time to get to. So if you're still confused and looking for some guidance, some support, please reach out to the Financial Empowerment Centers and utilize the resources that were listed here. And again, we do have our part 2, which will be on April 13th at noon. Again, we will do a walkthrough step-by-step process of completing the PSLF waiver. So we hope that you will join us for that. And so just to briefly wrap up, just a few quick polls. We would like to hear from you all. And so we'd like to hear from you as a result of this webinar. Do you feel better prepared to resume your monthly student loan payments? And this is, again, totally anonymous. The options are yes, no, or unsure. And so I'm glad to see that for the most part, you feel that this was helpful in helping you prepare. Those of you who responded no or unsure, again, please utilize the Financial Empowerment Center and all of the other resources that were shared previously. And then we just have a few upcoming events that I would like to briefly mention. We have the COVID-19 briefings for city workers focusing on long haul COVID, and that will be taking place tomorrow. And of course, March is National Nutrition Month. So we have a few different healthy eating and nutrition programs. We have our 5-a-day your way challenge, where we are giving advice, tips, and tricks on how to incorporate more fruits and vegetables into your meals. And we also have a series of cooking demos with In the Kitchen with Workwell NYC, Strive for 5. And we hope you can join us for those. And then lastly, on March 24th, we have our Art is Life showcase. Art is Life is one of our Project Build initiatives, and we've invited city employees to submit artwork on a variety of mediums reflecting on the theme of the future is inclusive. And we are really excited to feature some of the artwork that has been submitted, have a chat with some of the artists, and it'll be a really rich and fulfilling discussion as well. So if you're interested in any of these events, please visit our upcoming events page at on.nyc.gov/upcoming events. And of course, we invite you to stay in contact with us. You can visit our website, which is nyc.gov/workwellnyc. Our inbox is always open. You can send us an email. We invite you to follow us on Instagram or connect with us on LinkedIn. And of course, on our YouTube channel, we have a number of webinar recordings as well as other resources available to you all. And then one final poll before we wrap up. How would you rate the overall quality of this webinar? Again, it's all anonymous, and hope you'll take a moment to respond to the poll. So I just want to thank you all for joining us today, and thank you to our panelists, Deneen, Amy, Katie. Thank you for taking the time and the expertise to chat with us today. And thank you to the WorkWell team behind the scenes who provided a lot of support in making this webinar happen today. And of course, thank you to all of you, the attendees, for joining us. So with that, I hope you all have a great afternoon and enjoy the rest of your week, and look forward to seeing you all for part 2 on April 13th at noon. Thank you all.